Yeah, good evening all. Hope my voice is audible.
Yes,
And
yes, very much audible, very much audible.
thank you, sir. Thank you for the confirmation. Okay, friends. So we will start the day with the revision of yesterday's session. I have designed this PPT like revision question answer. Many of the question answer we have done yesterday. Okay, before starting the question answer, because many of my friends are joining now only. Yesterday they have missed the session because of some confusion or maybe they have not got the link. But yesterday we and our team has made all efforts to converted them into this webinar link. Okay, so yesterday something we have discussed about that how to start the accountancy journey. So first thing I will just share the gist only so that you the people who have joined new will get a fair idea of what we are talking about. And in between the question, approx 50 question I have prepared for the revision. So in between the question I will make the concept more clear. Okay, this is the concept. Okay, so yesterday the first concept was in accountancy first form of entry is journal. So we are starting from the journal entry. Then we are moving toward from journal to ledger entry. Then we are moving from ledger to trial balance. Then from trial balance to final account, or final account means balance sheet or trading and profit and loss account and balance sheet. This is the sequence. So yesterday I told also to kindly have your copy and notebook ready. Note it down. Today also I am again requesting all of you kindly have a notepad and that pen ready for that, because many of the concept you have to note it down. Accountancy verbal you can't do. You have to note it down the concept. Okay. Then after that we have certain rule like the journal entry. The rule of journal, when we are doing entry in journal, so then this rule is known as journalizing. And when we are transferring entry from journal to ledger, that rule is known as posting. Okay, journal, journalizing, posting, journal to ledger. Second rule is whenever journal entry we are doing, that is known as the rule of, or the entry is known as the first entry. First data entry is journal. Second data entry is ledger. Then the rule start. The rule start for three account: personal account, real account, and nominal account. What was the rule of personal account? That debit the receiver, credit the giver. Then rule for the real account was debit what comes in, credit what goes out. And rule for nominal account was debit all expenses and losses, credit all incomes and gains. And yesterday I told you specifically note down in nominal account, debit expenses or losses, bracket you note it down assets. All assets will show the debit balance. Okay. Then income and gains, bracket you note it down liabilities. All liability will show the credit balance. So this was the yesterday. Then journal entry we are doing like purchase good from someone. So what account will be debited, what account will be credited. So what I got, the rule we have to remember what comes in. So goods are coming, so purchase account debit to cash account or maybe to name account. So these are the journal entry we have done. Then self-balancing, the difference between journal and ledger I have told yesterday also. The difference between journal and ledger is the transaction first got recorded in journal, then after journalize the entries are posted into ledger. Second difference is the journal is known as the book of original entry and the ledger is known as the book of second entry. Journal is also known as the book for chronological record and ledger is known as book for analytical record. So these are the things: generalizing entry in journal and posting entry in ledger account. So these are certain rules which we have discussed. Then we have discussed about cash book. So I told yesterday only cash book are of three type. First, simple cash book. It is known as simple cash book where cash is only column of cash will be there. Yesterday performer I have also shown. My PPT has been for your information. Those who have joined new today only. PPT has already yesterday PPT has been already uploaded in Union Vidya. You log in into Union Vidya, go to Knowledge Cafe, and there you will find promotion CSA to officer promotion. Here the PPT has been already uploaded. You can see the performer which I have shared yesterday. Okay. So first cash book is simple cash book. In simple cash book, only cash column will be there. Double column cash book, one column will be added, that is a discount. Now the two column cash book, that is why it is known as double column cash book. Then the third cash book is triple column cash book, where with the discount and cash we add the bank column also. This is known as triple column cash book. And one form of cash book is also known as petty cash book, where is for petty expenses we have kept. Then we have discussed about trading and profit and loss account. Bank reconciliation office, of course, we have discussed in bank reconciliation what can be the problem. And in trial balance, I have showed the performer also. Today also I will show the performer of trial balance. Then trading and profit and loss. Some are the direct expenses. I told that trading account is prepared by the manufacturing concern. So whenever you have to calculate the gross profit, trading account will be there. Then for calculation of net profit, profit and loss account will be there. So these are the some things we have discussed. Balance sheet I have told, asset side, liability side. Today we will start discussing through the performer. Anybody can confirm me whether PPT is fairly visible to you? Anybody confirm? Through chat only you can confirm. Yes, chat. Okay. Thank you, Nilufar ma'am. Thank you, Raghavendra Rao sir, Geeta madam. Yes, yes. PPT is visible. Now the performer I am showing. This is the performer of what? Trial balance. This is the performer of trial balance yesterday, which I shared. So I told you the rule you have to remember is what? All expenses, losses, and assets will be debited. Okay. All expenses, losses, and assets will show the debit balance. All income, gains, or liability will show the credit balance. Okay. So this is the performer. Here you are seeing that if my cursor you are able to see, I am showing that this is the debit balance. Here see furniture and fixtures, plant and machinery showing debit balance. Discount allowed is showing debit balance. The discount received is my profit. It is showing credit balance. Salary expenses. These are the balance. Okay. Then here is the performer of trading account. Trading account. I told credit. What will be the credit? Sales and closing stock. Okay. Gross loss and gross profit is the closing figures. Here the debit side is important. Opening stock, 2 direct expenses. Opening stock, 2 direct expenses. And what are the direct expenses? Factory expenses. Expenses incurred in factory. Those are known as the direct expenses. Here I formula yesterday I told cost of goods sold. What is the formula for the cost of goods sold? Those who have not noted down, kindly note it down. The formula for cost of goods sold is anybody? Opening stock plus purchase plus direct expenses minus closing stock. That is the formula for that. And that is the things in net profit will come. Discount and all things carries outward, bad debt, this will shown. Then this is the, yesterday I have not shown this. This is the performer of balance sheet. So you have to remember. And I request you, whenever you are solving the question of balance sheet and profit and loss, go by the performer. Here at within 15 minutes or within 5 minutes, I can tell you approx 50 formulas from the balance sheet and this. But formulas are formulas. You will not able to mug up. But if you understand the concept, then it will be easy for you. Okay. Then here the formula is assets. Fixed assets, you will see in fixed assets what will come? Land, building, plant and machinery, furniture, fixtures, vehicle, equipment, that is comes under fixed assets. Okay, Pawan sir is telling, sir, please mention all the formula in the performer. Okay, I will try to do that. Okay, but you, Pawan sir, kindly remember that these is the not the formula. You just put some figures there, you will get the answers. Okay. Fixed assets, then this is the current. You have to remember what is coming under fixed assets. See, land and building, plant and machinery, furniture, fixtures, vehicle and equipment. This is the asset side. This is the right hand side, which my cursor is there. This is my asset side. Then current asset. What is coming under current assets? Cash in hand, bank balance, account receivable, stock, raw material, work in progress, then finished goods, prepaid expenses. Kindly do. This is the one of the expenses where people get confused. Prepaid expenses, some people are mentioning it into liability and profit and loss account. So prepaid expenses, kindly remember, it is the expenses which is paid in advance. So it is my asset. Which type of asset? Current assets. My liability side, it is owner equity. This owner equity is also known as shareholder fund. It is also known as net worth. Owner equity is oblique shareholder fund, oblique net worth. Okay. So what we can consider in owner equity? Share capital, equity share capital, preference share capital, reserve and surplus, general reserve, retained earning, capital reserve, revaluation reserve. This we are keeping in owner's equity. Then long-term liabilities, long-term borrowing, secured loan, unsecured loan, bonds, debenture, lease, deferred tax liabilities, long-term provision. These are in the long-term liabilities. Why I am telling this? Because many of the question you will able to solve from this formula. Then there is one thing, intangible assets. What are intangible assets? The assets which cannot be touched or seen. As per accounting definition, it is there. The assets which cannot be seen or touched. So intangible is goodwill, which cannot be seen or touched, patents, trademark, copyrights, brand value. These are intangible assets. So you should remember these are in exam, he will give the question, identify the fixed asset. Which one of the following is not the fixed asset? So in between it will, he will or she will put goodwill. So if you are calculating goodwill in that, goodwill is the asset, definitely no doubt in that. But goodwill is an intangible assets. You will able to recognize that goodwill is separate from the fixed assets or current assets. Then non-current assets, some long-term investment in sister concern, any loan and advances if firm has given, that come into non-current assets. Here, one like current assets are important, here current liabilities are also important. In current liabilities, what will come? Sorry, current liabilities, what will come? Accounts payable, that is also known as bills payable. Then creditors, then short-term borrowings, current portion of long-term loan means EMI payable within 1 year will come into current liabilities. That term loan will come into long-term liabilities, but EMI payable within 1 year will come in current liability. Then accrued expenses, unearned revenue, provisions. All provisions are by default current liability. Tagline for balance sheet. All provisions are current liability because they are made for a year, and all reserves are equities. All reserve will go to equities, means net worth. Okay, so these are certain. Now I want your active participation. Okay, now I will share the next 15 to 20 or 30 minutes. We will going to share the questions. Any doubt in between in that question, you can type in the chat box. Chat box is rightly open in front of me. I will try to answer. Okay. Now the first question. Yeah, you answer in the chat box. ABC only you answer. What is the primary purpose of accounting? Some of the question belongs to previous day session also. So if it is repeating, then kindly do the answer also. Akhil, Aman. Thank you, Aman sir, Akhil sir. Roma madam, thank you. B. Kindly quickly give the answer quickly so that before 10 responses, I will not stop. At least 10 I need. Diksha, Pooja, Prashant sir. And kindly pardon me if I am taking names, sir and ma'am by default is there. Okay. Okay. So then ensuring uniformity and comparability. Thank you for all who has given the answer. Now the second question. Which account is debited when machinery is purchased for cash? First, you have to identify what is the machinery. It is a personal account, nominal account, or real account. Okay. So machinery, what comes in? Debited. So which account will be debited? Very good. Thank you, Pawan sir, Roma madam, 841206, Akhil, Ramesh ji, Hussain. Okay, yes, machinery account will be debited. Now, calculate this quickly. The opening stock is 40,000, purchase is 120,000, closing stock is 50,000. Calculate, give me the cost of goods sold, COGS. Cost of goods sold. Yes. B, C, D, any answer? 1,10,000. Some people are giving A. Okay, 110. Very good. Very good. Very good. Subham sir, very good. Ramesh sir. Malti madam. Malti madam is okay. Some people are giving B. Malti madam, A. What answer I should take? Okay. Note it down the formula for cost of goods sold. Opening stock plus purchase. Note it down the formula. Opening stock plus purchase plus direct expenses minus closing stock. Okay, so that is the formula for this. Then answer is 1,10,000. Great. Which account type is affected by credit all income and gains? Right now, previously I told credit all income and gains. Which type of account? B. Yes, Akhil. B, Asutosh, Aman sir, Mathu sir, BK. Okay, yesterday's question. You have to remember credit all income and gains. Debit all expenses and losses, bracket assets, credit all income and gains, bracket liabilities. Okay. What is the primary purpose of a journal in accounting? What is the primary purpose of journal entry in accounting? Yes, B. Great, great. I want again Jyoti sir, Asutosh, Jyoti madam, Malti madam, okay, Nitish, Anshika madam, Ramesh sir, Vinod sir. Very good. Great. But same people are answering. I request other to answer also. It will be more interactive. Okay. Praveen sir, thank you, Praveen sir. Diksha madam, okay. Then to record day-to-day financial transaction chronologically. Okay. That this is the B. Answer will be B. What is the primary purpose of journal in accounting? If you are having any question, kindly hold me for that completion of this question set. You keep your question after the completion of this set. I will ask the question. You can relate it to this accounting and all. So you can ask. I will answer. Okay. Hold it in between. What is the narration in the journal entry? What is the narration in the journal entry? Yesterday I told in journal entry in last something is written after journal entry in performa if you are remembering. What is the narration in journal entry? Yes, B answer. Jyoti madam, Akhil sir. Very good. Very good. Other people? Yes, Mato sir. Okay. Prashant Diksha, Vinosa, Pawan Singh, Mega madam, Pooja madam, Dev. Yes. Answer is a short explanation of the transaction below the journal entry. Because I told there is one entry, business is going on 90% cash to cash basis. But there are certain entry which are in credit because no business is on cash to cash basis. There are some credit sales also. So whenever I am making the entry, the majority of my entry is in cash. So I can make direct entry in cash book also. Yesterday I told. But now there are some entry which are in credit. If you are not writing in narration why you have made this entry, though people or your accountant or your CA will not able to understand why you have noted down this entry. Maybe cash entry wrongfully you have noted down, so he will not able to understand. Okay. Yes. Now the question. Calculate net working capital. If current assets are 120, current liabilities are 80, intangible assets. Okay, the formula of net working capital is, note it down the formula first, current assets minus current liabilities. The formula of net working capital is current assets minus current liabilities. Now tell me the answer. Very good. Aman sir, Pooja madam, yes. Formula of net working capital, current assets minus current liability. So rightly 120 minus 80. Intangible assets for confusion I have given. Yes, great, great. When recording a journal entry, which account is debited in case of purchasing goods for cash? Again, I told for purchase entry, which account will be debited? Purchase account debited. Yes, which account will be credited? Which account will be credited? Cash account. Purchase account debited to cash account. Yeah. Okay. Diksha madam, you are giving A answer. A is credit. Okay. Cash will go out. Whenever you purchase something, what comes in? Goods. What goes out? Either cash or either if you are purchased on credit, then the name of that person. So that you remember, okay, I have taken goods rupees 5,000 from him. I have to return him some money. I have to give them cash. Okay. Yes. Purchase. What is the term used for recording entries in ledger? Yes. Many people. Pooja madam is saying debit cash. No, madam, what comes in, not cash, purchase will come. Yes. Posting, very good. Many people yesterday has given it wrong. Very good. Entries, transferring entries from journal to ledger is known as posting, and entry in journal is known as journalizing. Very good. Thank you, Vinod sir, Mato sir. Thank you, Geeta madam. Which ledger contains account related to customer? Yes. The people who have joined today only, I want them to answer also. Which ledger contains accounts related to customer? Okay, Akhil sir. Hey, Jyoti madam. Yes. Sales. Yes. Three madam. Mato, Asutosh sir, Prashant sir, Hemchandra sir, Pooja madam. Okay, great. It is sales ledger. Customer. Who is customer? Where sales accounts are there? Yes. Calculate this. Goodwill 25,000. Intangible assets 70,000. Prepaid expenses 15,000. Calculate the value of intangible assets. So give me the intangible assets. I showed you the performer. What is the intangible assets performer? Intangible assets. Intangible assets are goodwill, patents, trademark, brand name. These are the intangible assets which cannot be seen or touched. I told. So give me the total intangible assets. Other intangible assets. Total are there, goodwill is there, other intangible assets. Hmm. Other, sir, Jyoti madam, 95. Okay, option is not there, madam, 95. Kindly see the options also. Very good, you have tried. Asutosh sir, A, Mahendra sir. Okay, Sri is saying 25. Kindly see. What is the goodwill? 25,000. What is the total intangible asset? 70,000. It means goodwill is included. So 70 minus 25. Answer is 70 minus 25. Then it will become total intangible assets. Okay. So A is the answer. Okay. Many people has given. Okay. Then I have rightly has given prepaid expenses. Okay. Some people has giving the answer 30,000. Okay. You found trapped in my trap. I have given this for trap purpose. And I told in the perform also, kindly remember, if you are listening me, kindly remember prepaid expenses is which assets? Current assets. I told you at that time also, prepaid expenses is current assets, not intangible assets. Okay. So the examiner will give you this simple type of question, but you should not be trapped. Okay. Yes, great. A ledger is also referred to as a ledger is also referred to as ledger. Yeah, answer, please. Okay, Asutosh sir. Okay, Sri B. Okay. The book of original entry. Okay, many people book of original entry. I told specifically journal is known as book of original entry. Once again, I am repeating. Journal is known as book of original entry. Journal is known as book in chronological order. Entry in the journal is known as journalizing. Ledger is known as book of second entry. Ledger is known as books of analytical record. The entry from journal to ledger is known as posting. Okay, kindly remember that, because many times each year I think they are asking this question, transferring from journal to ledger, or what is the journal chronological order. Each year it's one question is perfect. Okay, what is the ledger account opening balance? Yes, tell me, what is the ledger account opening balance? Okay, which question we are discussing here? Kindly remember, these are the important questions and the recalled question. Recalled question means the question which has been asked in previous exam. So chances are there they can be repeated. Okay. What is the ledger account opening balance? Okay, see the balance carried forward. Yes, from the previous period. The people who have attended yesterday class, they know we are using the term known as self-balancing ledger. If something is written at the end of the month, I have to balance it by balance carried down, CD. And the next month opening day, I will use to balance brought down. Great. Which principle ensured that for every debit there is an equal credit? Yes, what is the answer? Which principle ensured that for every debit there is an equal credit? Okay, C. Aman sir. Okay. C. M. Malti madam. Yes, great. It is dual entry concept or dual aspect principle. Great. All people. Yes, now calculate. Total assets is this. Fixed assets are this. What are current assets? Simple question I have put so that concept will be cleared. Once you get cleared through the concept, now you can answer any question from the balance sheet. Yeah, give me the answer. A. Okay, A. Many people A. Great. D. Ashutosh sir, who has given the D answer? 1,50,000. Total assets are 150. Fixed assets are 1. Remember that total asset consists of whom? 4 headings: fixed assets, current assets, intangible assets, non-current assets. If you are remembering the performer which in the beginning I have shared, what are the total assets? Consist of fixed assets, current assets, intangible assets, and non-current assets. So here fixed assets is as given, total assets is as given 150. You put 1 lakh in fixed assets, then remaining will be the other assets. But I am asking only current assets, so answer is 50,000. Great. What is the primary purpose of balancing a ledger account? Yes, tell me, what is the primary purpose of balancing a ledger account? This question has been asked previously many times in the exam. What is the primary purpose of balancing a ledger account? Just waiting for the answer. Akhil sir, C. Okay. Hussain sir, C. Okay, C, B, some people B, some E. So mix answer, Malti madam B. Okay. Ensure debit equals credit. To ensure debit equals credit is the primary purpose of trial balance. Okay. Trial balance. Okay. So here the purpose is to calculate the closing balance to carry forward, because from ledger I will make the trial balance. Okay. Which of the following adjustment might need to be made after preparing the trial balance? So trial balance is simple entry we have made, but there are certain transaction which has to be adjusted after that. That is known as like depreciation, accrued, prepaid income, outstanding liability. So answer is all of the above for this. All adjustment has to be made after the trial balance. Okay, what happens if the trial balance shows unequal debits and credit? Yes. Okay, previous is E answer, accepted. Now the next question, what happens if the trial balance shows unequal debit and credit? B, okay, great, Dev. B answer, okay, got it. Mother, okay, yes, all people are clear. It suggests that there are error in the accounting process. Okay. Now note it down this. Give me the figure. Inventory is 30,000, and remember inventory is known as stock only. And inventory 30,000, goodwill 15,000, cash 20,000, account receivable 25,000. Give me current assets. Identify the current assets here. Yes. Because these are the questions which are coming repeatedly in the exam. Only simple type of question they will give you. Inventory is 30,000, goodwill is 15,000, cash is 20, account receivables means bills receivable is 25. Give me total current assets. Definitely, I told in the beginning, kindly keep your copy and pen ready. Oh, okay. Verbally, if you can solve, very good. Malti madam D answer, Mato sir B answer. Okay, D and B answer has come. Okay, A answer also come. A, B, D answer is there. Now C and E is left. Okay, 75. Okay, other people try, give it a try. What will happen? It will be wrong only. Na? I am here to keep it right. No problem in that. You try from your side. Okay, A, C. Okay, only E is left. Otherwise, A, B, C, D answer I got. E is left. Nobody has given me E answer. Okay, sir. Okay, yeah. See, now what are the current assets? First, you identify inventory is the current asset. Stock, yes, 30,000. Goodwill. Now, goodwill, I told goodwill. Now, I said goodwill is an intangible assets. Intangible asset means which cannot be seen or touched. So here I will not take inventory 30,000, cash 20,000, 50,000, account receivable. Again, current asset 50 plus 25, 60, 75,000. Answer is B. Okay. 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 Okay, Dev sir. E, yes. E will be the answer. Okay. Answer is only B answer. Okay. What is the purpose of a trial balance? Yes. Now, what is the purpose of trial balance? What is the purpose of a trial balance? Yes. Okay. C, C, A, C, C. Okay. D also people are giving. Okay. The purpose of the trial balance is to check the mathematical accuracy of the ledger. If trial balance is not matching, because if you have gone directly to the final accounts, then there will be trouble. Now you have to check each and entry. So trial balance is a check going from general ledger to balance sheet, because once you enter into the balance sheet, now your gross profit will be wrong, your net profit will be wrong. When these two are wrong, so definitely your balance sheet will also be wrong. So here is trial balance is the check. If there it is not matching, so it means either you have omitted the entry, either you have partially entered the entry, either you have changed debtor creditor like this. So some things are there. So to check the method, yes. Which of the following must be true for a trial balance to be considered correct? Yes. Previous question also, only. Previous question I am giving. If previous question you are remembering the same. Which of the following must be true for a trial balance to be considered correct? Yes. Income equal expenses. Asutosh sir is saying total debit credit. Okay. A and B answer is coming. Total asset is equal to total liability. Total assets equal to total liability is balance sheet. Opening balance equals to closing balance, that is self-balancing ledger. Okay, the answer is total debit equals to total credit. I told you debit and credit should match. Otherwise, we will check if there is some problem in the ledger or journal entry. Yes, give me this. A company has a total fixed assets 150, accumulated depreciation this, calculate net fixed assets. Easy question. Net fixed assets or net block formula is fixed assets minus depreciation. Okay, fixed assets minus depreciation. Great. All people will give the answer correct. Yes. Simple question I have also kept that so that it will give you confidence also and concept will be clear. Which of the following is not a reason for preparing a trial balance? Yeah, tell me which of the following is not a reason for preparing a trial balance? Why I am not making the trial balance? E, to reconcile accounts with the bank. Yes. Otherwise, arithmetical accuracy, financial statement, detect error, all are the reason to reconcile accounts with bank. That is known as bank reconciliation statement. Okay, BRS. If the trial balance does not balance, what could be the likely reason? If trial balance is not balancing, so what will be the likely reason? Yes, D, all of the above. Okay. I am giving here answer all of the above, but in exam, kindly apply your mind. Sometimes the answer is all of the above is not there. Okay. Now the examiner is also know that people by default are ticking to all of the above. So kindly, if you are having any conceptual clarity, then go. Okay. Yes. Okay. Now again, total liabilities 40,000, current liabilities 10,000. Give me non-current liabilities. Non-current liability means other liabilities. Same question, fixed assets. I have asked the questions. Same fixed assets question. Very good, Asutosh sir. Prompt answer you have given. Yeah, waiting for that. Only one figure is there, na? Answer. Okay. 40,000 minus 10, it will be 30. The current liability consists of whom? Owner's equity, long-term liabilities, and current liabilities. Owner equity is also known as shareholder fund and capital also or net worth also. Okay. Yes. What is the main objective of preparing trading account? Now we are starting the question of trading profit and loss account. Yes. What is the main objective of preparing a trading account? Yes. Answer. Kindly waiting for the answer. Okay. Answer is now coming. Akhil, Anil, Geeta madam, Akhil sir. Very good. Pooja madam. Great. All people are requested to give the answer. Wrong, you can, if you are not having idea, you put the answer. No problem in that. Here is nothing is that wrong. I am here. Pawan Singh, Aman sir. Very good. I am only reading the name only. Ramesh Shah sir. Thank you. Okay, great, great. Kindly give the answer, please. Okay, the main objective of preparing trading account is gross profit. I once again repeat the concept. Trading account is prepared when there is a manufacturing concern. So here all expenses are debited, sales and stock will be credited. Here one of the formula is also of cost of goods sold. Cost of goods sold formula is opening stock plus purchase plus direct expenses minus closing stock. Here all the expenses in trading account is known as direct expenses. Direct expenses means expenses which are incurred in factory. Okay, that is known as direct. Indirect expenses, expenses which are in the office. So here carriage inward and carriage outward concept was there. I told yesterday also carriage inward is on direct expenses. Maybe I have purchased some raw material and bringing it to the factory. It will come into direct expenses. This question has come many times. Carriage outward is the indirect expenses. It will come in profit and loss account. Okay. Which of the following is not included in a trading account? Yeah, now tell me which of the following is not included in a trading account? Yes, Shubham sir. Okay, Dev sir, Geeta madam, Diksha madam, Ramesh sir, Akhil sir. Great. 841206. Vinod sir, Jyoti madam, Pawan Singh sir, Mato sir, Sri. Roma madam, Mahendra Naik sir, Mega madam, Pawan Singh, very good. The answer is interest on loan. Opening stock will come on debit side, sales credit side, wages debit side, closing stock credit side. Great. Now give the answer of this. Calculate it quickly. Great. Accounts payable, how much? 40,000, outstanding expenses 15,000, short-term loans 25,000, term loan 10,000, prepaid expenses 10,000, total current liability. Give me current liability only. Yes. I am waiting. Who will give the first answer? Accounts payable 40, outstanding expenses 15. Okay, Ramesh sir, great. Subham sir, great. Okay, key is there only. Key answer is E. Okay. Sundaram sir, C. Roma madam, A. Mato sir, A. Great. Mahendra Naik sir, A. Okay. See here, accounts payable is the current liability, which is known as bills payable. Yes, 40,000. Outstanding expenses is the current liability. Yes, 40 plus 15, 55,000. Short-term loan is a current liability. Yes, bank CC and ODs are known as current liabilities only because they are renewed each every year. What is the definition of current liabilities? The liability which can be paid within 1 year. So bank loan and CCs, their bank we are giving two type of loan. One is term loan, one is CC. CC is for day-to-day expenses. Each year, if you are remembering stock statement and renewal you are doing each year, na? So it is current expenses only. Okay. So accounts payable 40,000, outstanding expenses 15, 55,000, short-term loans 25, 55 plus 25, 60, 80,000. Term loan. Term loan is a long-term liability. It is not current liability. So remain 80,000. Prepaid expenses. Again, I am repeating. Prepaid expenses is current assets only. Repeating again and again so that you can remember prepaid expenses is current assets only. The answer will be 80,000. Knowingly, I have given the answer 90,000 also so that it can match 80 plus 10, 90 you can do. Okay. So some people has, yes, Geeta madam, within a year. It is within a year. Okay. Current liabilities, the expenses which can be paid within a year is known as current liabilities. Okay. In a profit and loss account, the net profit is transferred to where? Net profit. In a profit and loss account, net profit is transferred to, okay. Some people are A, some people are B, A, B, A, B. C answer also, okay, come. A, B, C answer came. Okay, B, A, B. Okay, okay. Yes. Here people will be confused. I have written balance sheet under liabilities. No. In balance sheet, it is under capital. Capital account, it will be transferred. Okay. Capital, we are writing net profit. Okay. The perfect answer here is capital. If capital account is not mentioned, then reserve fund is also mentioned that it can be also in reserve, but it is retained earning. So don't be confused. Net profit will be always transferred to either added to capital. If it is net loss, it will be deducted from the capital. Okay. Give me the gross profit from this formula. Gross profit. Yeah, if you know the performa of, if you are remembering the performa of trading account, then you will able to answer this. Yes, 841206 E answer. Okay, Mato sir. Okay, others, Diksha madam. Okay, yesterday people, I think yesterday people are answering. Prashant sir, Mahendra Naik sir. Okay, great. The answer is C. Total sales minus cost of goods sold. Yesterday some people has given answer D. So cost of goods sold automatically include purchase, automatically include direct expenses. Great. Which of the following is classified as an indirect expenses in profit and loss account? Yes. Profit and loss, indirect expenses. Yes. Give me the answer. D. Yes. Yes. Great. Salaries. Okay. Carriage inwards will come direct expenses. Wages will come in direct expenses. Freight will come direct expenses. Factory. Yes. Great. Yeah. Now you are able to remember. Opening stock is 20,000. Purchase is 50,000. Direct expenses is 10,000. Closing stock is 30,000. Give me cost of goods sold. Now 5 or 6 times I have told you the formula. Give me cost of goods sold. COGS. Okay, A. Some people here are giving. Okay. Opening stock 20, 50, 70 plus 10, 80, 80 minus 30, 50. Great. A is the answer. Sales are 1 lakh. Cost of goods sold is 70. Indirect expenses is 15. What is the net profit? Yeah, give me the net profit. Give me the net profit. Sales 1 lakh. Cost of goods sold 70. Indirect expenses 15. What is the net profit? A. Some people are A. Great. Answer is A. Great. Sales minus cost of goods sold is gross profit. 1 lakh minus 70, 30,000. 30,000 minus gross profit minus indirect expenses is net profit. 30 minus 15, 15,000. Company gross profit is 40,000. Indirect expenses 10,000. Indirect income 5,000. Give me net profit. $35. Okay, C. 35. C. Okay, great. People are giving the 35 in the answer. Gross profit 40. You deduct indirect expenses. You add indirect income. Then it is 45. Then you deduct 10,000 expenses. It is there. Now, I think hope second last or last question. Opening stock is 25,000. Purchase 75,000. Closing stock 35,000. Direct expenses 50,000. Again, cost of goods sold. I have repeating this question because these questions are important. Many times they have been asked. Okay. 75 plus 25. 80, 90, 1 lakh. 1 lakh plus 15, 115. 115 minus 35. A answer. Yes. 115. It is A. 80. What is transferred to the credit side of trading account? Out of this, which is the great? A is the answer. Ramakrishna sir, Vinod sir, Pawan Singh sir. Okay. What is transferred to the credit side of the trading account? Next question. Okay, sales, Subham sir. Great. It is sales. Indirect income will be debit side of profit and loss. Interest will be debit side of profit and loss. Direct expenses, debit side of gross trading. Purchase, debit side. Net loss means excess of gross profit over expenses or excess of expenses over gross profit. Yes, net loss. Give it a second to think. C, B. It is excess of expenses over gross profit. Great. Which of the following will appear on the debit side of profit and loss account? Yes. It is salary account. Great. Carriage outward is shown in. Carriage outward is shown in A, B. People are confused. I told there are two concepts, carriage inward and carriage outward. Carriage inward is direct expenses and it will be shown in trading account. Carriage outward is indirect expenses, which is shown in profit and loss account. Great. If liabilities are 30,000, owner equity is 25,000, what are the total assets? Anybody? Liability side, liabilities 30,000, owner equity 25,000, what are the total assets? C, 55,000. Yes, great. Liabilities, because one formula is there. Assets equal to, note it down the equation. It is a formula. Asset equals to capital plus liability, or asset equals to owner equity plus liability. Which one of the following is not a direct expense? Yes, answer D. Okay, salaries to staff. Okay, that's all, friend. That is the revision slide I have gone through. Okay. I hope that yes, the people who have joined today has got a little bit fair idea what we have discussed yesterday. and wishing you again the best of luck for the exam. Anything, this is material and all the things will be available in the Vidya portal only. Some people has asked that webinar has not been uploaded, so we will make it uploaded right now. Okay, it will be get uploaded, so you don't worry about that. Okay, thank you. I invite now Ramna sir for taking the session forward. In the meantime, if any query is there, you can ask in the chat box, then I will reply. Okay.
Is it visible? Can someone confirm that the PPT is visible with a thumbs up?
Yes, yes, yes.
Yes, sir. Thank you, sir. Thank you, sir. Thank you, Amit ji, for such a wonderful session on revision. Accountancy is one subject which requires a lot of revision, and the amount of time that you have spared for all of them, it will add a big mileage in their exam. So this session, because many have joined now, I see this session, we are going to discuss about the partnership, LLP, reconstitution of partnership, goodwill, and how to calculate definition of the goodwill, and care need to be taken during reconstitution, and some part of about the company and Companies Act, and about the bill of exchange. This will be the session that I will be going through. To keep you engaged, I have kept the PPT in such a way that after a certain number of slides, I am putting some questions. So I request you to answer the question in the chat box so that it keeps engaging one. So I'll start my session. Okay, so let me go through the definition of the Partnership Act. Section 4 of the Indian Partnership Act 1932 defines Partnership Act as follows. Partnership is the relationship between persons who have agreed to share profit of the business carried. This one. Carried by any of them acting for all. The main features or essential elements of the characteristics of the partnership are, we know that the partnership, proprietorship is a one-man army. Partnership is either two or more persons associating with each other to carry out the business. Generally, there will be an agreement between them about the business, about the profit sharing, and the relationship of this is noted as principal and agent. We will try to understand about the principal and agent in detail in the later course. And another part is no separate existence is there for this partnership firm, and business carried on by all or any one of them will act. So what is the understanding of, let us try to know what is the meaning of that agent and the principal. The relationship of the principal and the agent is the partnership is one of the core principles of the Partnership Act, the partnership law. The partnership exists because of the mutual trust and shared responsibility among the partners in conducting the business of the partnership. Partner acts as an agent of the partnership. How he acts as an agent? Each partner acts as an agent of the partnership and the other partners. This means that any partner can bind the partnership to contract or obligation as long as they are acting within the scope of the partnership business. I repeat, this means that any partner can bind the partnership to contract or obligations as long as they are acting within the scope of the partnership. It is that underlying principle is they should act within the scope of the partnership's business. For example, if one partner enters into contract with a supplier for goods needed in the business, the partnership is bound by that contract. This is how he acts as an agent of the partnership. Partner as a principal. What is this? Each partner is also a principal, which means they are bound by the actions of other partners when those actions are within the scope of the partnership business. Like each partner is also a principal, which means they are bound by the actions of other partners when those actions are within the scope of the partnership business. This mutual agency gives each partner both the authority to act and the responsibility for the action of the others. So it speaks about the principle, how it is, and how the partner acts as an agent. This is what our fifth point is. Questions may be framed on this, on which stage the partner is acting as a principal, or which action of the partner is taken as a principal. The questions may be formed. Let us see in the multiple choice questions coming in the next slides. And the scope of the authority. The authority is well within the partnership business only is the authority. Liabilities of the partners. Partners are jointly liable for the obligations of the partnership. If one partner's action results in a debt or a liability, all partners share responsibility for it. The feature of the partnership is that if one partner is creating a liability for the partnership, all other partners are also liable in the process. For example, if a partner takes a loan for the business, that is for the partnership business, all partners are liable for repaying it. And all the partners must act as an agent, must avoid conflict of interest, and must not take advantage of their position for personal gains. This is a mutual understanding. And one more point is partners own a fiduciary duty to each other and to the partnership. What does it mean? Meaning they must act in good faith, with loyalty, and in the best interest of the partnership. While dealing with the third party also, when the third party dealings with the partners, they are entitled to assume the partner has authority to act for the partnership unless they know otherwise. Means unless under the third party knows the authority is there or not, they will feel that their party is having the authority, the particular partner. This protects third parties who act in good faith and rely on the apparent authority of the partner. So this is what a brief on the agent and principal part. And another point was there is no separate existence. What does this mean by separate existence? And
It is not changing.
Yeah, it is in the same page. Thank you. So there is no separate existence. I am now discussing about the seventh point. There is no separate existence. Yes, Vishalji, is there any? Yeah. Okay, there is no separate existence. What does it mean? A partnership is not considered as a separate legal entity from its partners, unlike a corporation or a company kind of thing. Instead, the partnership is simply a group of individuals working together under a shared agreement. Now we can understand that a partnership is not considered as a separate legal entity. Partners are jointly responsible. The partners are personally liable for the debt and obligations of the partnership. Partners are personally liable for the debt and obligation of the partnership, whereas it is not the same in the company. Creditors can sue the partners individually or collectively to recover the debts. No independent legal status is given to the partnership. The partnership does not have its own legal identity distinct from the partners. It cannot own property in its name or entire contract as a separate person, except in judiciary, where partnerships are granted separate legal status under LLP law. Other than that, it is having no independent legal status. So what is the practical implication of what we have discussed now as far as the no separate existence? It means that the assets of the partnership are considered, the assets of the partnership are considered the collective property of the partners. Legal action must generally name the individual partners rather than the partnership itself. Partners share profit, losses, and liabilities in accordance with their partnership agreement, or if not specifically equally. If not mentioned, it is an equally shared. Now let's try to understand other features. In the partnership, the another feature is it's a fixed and fluctuating capital. Capital can be in fluctuating nature. Interest on capital brought in by the partners, including the sleeping partners. Even the sleeping partners who are not active in day-to-day business can also gain the interest from the partnership for the capital or for the borrowing or for the lending that they have done. Interest on drawings made by the partner is also payable. Valuation of goodwill on the occasion of valuation of the goodwill is carried out on the occasion of change in profit, sharing ratio, admission of a new partner, retirement, death of one of the partners or one or two, dissolution and amalgamation of the firm. These are the basic features of partnership firm. Now let's try to understand what are all the, just a minute. Yes, sir. So now let us look into the rights of the partner. What are all the rights of the partner? Now we have understood what is a partnership, what are all the features of it. It ultimately says that partnership is constituent of association of people who have come together for a common cause. Now, what are all the rights of the partner? Every partner has the right to share profits or losses with other partner in the agreed ratio. Where this agreed ratio is generally mentioned in the agreement. Every partner has the right to take part in the conduct of the business. So every partner has the equal right to conduct the business. Every partner has the right to take part in the conduct of the business. Day-to-day business also, every partner can take a part. Every partner has the right to consult in the matters related to the partnership business. Every partner has the right to inspect and have a copy of books of accounts with him. Every partner has a right to disallow the admission of a new partner. Every partner has the joint owner of the partnership property. Every partner has a right to retire from the firm after giving a prior notice. So after giving prior notice, only a partner can retire. That is, it says, as per the rights of the partner. If a partner has given a loan to the firm, assuming that the partner has given a loan apart from this is capital, he has a right to receive interest at the agreed rate. If the partnership deed is telling at a particular rate, that rate he is eligible to get interest from the partnership firm. Otherwise, if it is not there, if the rate of interest is not agreed upon, it is paid at the rate of 6% per annum. These are the rights of the partnership. So if it is not okay. So next is importance of partnership. Now we have told about the partnership deed, what it has. The importance of partnership deed, it is an association of people. And unless and until there are certain written rules or regulations among them and what the business that they are going to conduct, what are all the rights and duties, the partnership for a longer period may not be able to continue. So it is a highly important document for a partnership. It regulates the rights, duties, and liabilities of each partner. It helps to avoid any misunderstanding among us the partners. Any disputes among us the partners may be settled easily as a partnership deed may be readily referred to. So partnership deed is almost a document on which all the partner agrees about the rights, duties, liabilities of each partner, what is the profit sharing ratio, if there is any misunderstanding, what is the business that need to be carried upon, if there is a misunderstanding, it avoids any misunderstanding in the future course of the business. So let me go with the first question. Under which section of the Partnership Act 1932 partnership is discussed? I think you can answer it in the chat box. Yes, sir. I think Aruna A, Vinod Saha, Ramesh
Ramanaji,
Sharma ji. Yes, sir. Yes, sir.
Ramana, who has, see, there are a lot of spelling mistake in this.
Yes, sir. Yes, sir. Yes, sir. I have
Who
observed.
has
sir.
prepared that?
No, no, no,
Kindly
I-
take care of that.
Yes, sir. Yes, sir. We will take care, sir. We will take. Sir. Yes, sir. It is B. Okay. B. Mahato Rakesh ji. Yes. Arun Jaiswal 813291. Section 4. Yeah. In the first section only, we have actually discussed that section 4 of 1932 Partnership Act narrates about the part, defines the partnership. Thank you, Prashantji. It is correct. Section 4. Let me go to the next question based on the previous slides only. So 4 is answer. As per the section 464 of the Companies Act 2013 and the accompanying rules, what is the maximum number of partners? Basically, what is the maximum number of partners allowed in a partnership firm engaged in a business other than banking? Yeah, Dinesh ji, I think E200. Okay. Okay, many are giving E. Yeah, Akhil ji, E. Mahato ji. Okay. 150. Okay. 71096. Sagar Tikas E. 50. Okay. A. Arun Jaiswal ji. A. Yeah. Thank you. Thank you. Pawan Singh ji. Great. Great. Actually, minimum is 2 and maximum is 50. Beyond 50, the registration is required. Yes, sir. Yeah. So let us go for the another question. Which of the following is not a main feature or essential elements or characteristics of a partnership? It's a tricky one. The question is on English basically. Yes, 3 A they have given. Yeah, she has given A. Ramesh Saha A. Okay. Yeah, others can also answer. It is a very easy one. It is a tricky one only to confuse you. Generally, the exam people may keep it at E or some other place. B, okay, agreement. A, okay, Aruna ji, Sagar Tikka ji, okay, okay, okay. E also, okay. Principal and agent, I have discussed at the length and breadth, okay. But still, partnership requires at least 2 people. It is one or more is, I am telling it is not a main feature. So one or more, it is a tricky question to confuse, nothing else. Okay, let's go with another question. Under the Indian Partnership Act 1932, if no agreement is made between the partners, how are profits shared in the partnership firm? How are profits shared in the partnership firm if no agreement is made? Now we have understood that there is an agreement. Okay, based on the capital investment. Okay, Sri has Subham Agarwal based on the capital investment. Okay, Ramesh Sahaji is also going with A. Okay, Geeta, no other opinions. Others can also participate. Yeah, Arun, Vinod, Saha, Vandana, all are going with A. E, B, A. Someone has told B, me, A, E, key. Okay, B. Subham Agarwal has gone with B. Okay, okay. Few more answers I'm looking for. Can you participate? Yeah. Let me give the answer. Okay, let's go with it. Is equal among all the partners. If there is no partnership agreement or deed available, so then it is to be distributed equally among all the partners. Okay, let me go with another question. Which one of the following statement is not correct under the rights of the partner? We have discussed about various rights the partner have. Yeah, Pooja Devi madam, why not in capital ratio? Okay. Yeah, we have a slide. We will go ahead in detail in that also. Aruna sir, enable chat option to everyone. For some of them, chat is enabled for everyone. They can log out and log in. It can be seen. Yeah, some has given Prashant Kumar ji, Ramesh Sahaji, Mahato ji, Subham Agarwal. Yeah, they have all given C as option. Okay. So every partner has a right to share the profit or losses with other partners in the agreed ratio that we have seen, it is there. Every partner has a right to disallow the admission of a new partner. That is also there. It's a right. Every partner has a right to retire from the firm without any prior notice. That was not there. It was with prior notice, they have a right. Without prior notice, there is no right. Even partner has a right to inspect and have a copy of books of account. That is also there. Every partner has a right to take part in the conduct of the business. That was also a right. Thank you. It is a C is the right answer. Thank you. Let me go with another question. What is the duty of a partner in relation to the partnership firm under the Indian Partnership Act 1932? What is the duty? To only invest the capital and avoid managing daily operations? It's a common sense question. Partnership, you know, it is an association of people. To compete with the firm in similar business activity, to actively participate in the conduct of the firm's business, to transfer firm's asset to personal ownership, to avoid working for the firm without financial compensation. Yeah, it is a what is the duty of a partner? I am asking. Yeah, C. Yeah, Ramesh ji, Pooja Devi, Madam, yeah, Prashant Kumar ji. Only few who are regularly. Vandana ji, yeah. Yes, yes, Mahato ji. Others can also participate. Yes, sir. So the answer is right. It is to actively participate in the conduct of the firm's business. Right, sir. Right, right. Great. So, Hemanji. Then I am going with the next question. Which of the following is not the duty of the partner in partnership firm under the Indian Partnership Act 1932, which is not a duty? Earlier I have asked what is a duty. Now it is not a duty. To compete with the firm in similar business? Yeah. Okay. D. Kindly share recalled questions also, sir, on Union Vidya. Yes, sir. Sure, sir. We will share this. Union Vidya has lots of material on this. You can collect it. Harika, Hirika, D, Pavan Singh ji, Rakesh ji. Yes, yes, Ramesh Shah ji, Sinu ji. Yeah, great participation. Let us look into the answer. So I'm telling about not a duty. So the actively participation is a duty. So C is the right answer in that. Okay. Now let us look into the other aspects. Rules applicable in the absence of the partnership. One of the people have asked why it is not in the ratio of the capital contributed. In the absence of the partnership deed, or if the partnership deed is silent on certain point, the following provisions of Partnership Act 1932 will be applicable, because Act itself has certain points to be specified for. So it specifies about the profit sharing ratio, interest on capital, how much interest it can come, interest on drawings, salary to a partner, interest on loan, admission of a new partner. Each partner can participate in the conduct of the business. Each partner can inspect the books of the firm and can take a copy of the same. This is what the rules applicable in the absence of the partnership. That is the reason that the profit sharing was equal among the partners in the absence of the partnership deed. Next. In the absence of the partnership deed, partners share profit or loss equally. No partner is entitled for any remuneration in the absence of partnership deed. No interest on capital is allowed. No interest on drawing is charged. No loan, a loan given by the partner to carry an interest of 6%. That is what the essence of things when there is no partnership deed available. So few more questions we will go. What happens when there is no partnership deed and the partnership capital balance is to be paid interest? Just now we have told. Yeah, answer quickly. What is the interest to be paid to the partner? Okay, Prashant Kumar ji, Mahato ji, Geeta ji. Yeah, good, great. Yeah. You have to see the question, read the question again. I think then you can answer correctly. What happens when there is no partnership deed and the partner's capital balance is to be paid interest? Capital, we are treating up to the capital. Okay. In the absence of the written partnership deed, how is the expulsion of a partner handled? expulsion of a partner, how a partner can be removed from a partnership in the absence of a partnership deed. Can any partner be removed in the absence of a partnership deed, or he can be removed? What is a clause for it? A partner can never be expelled. Is it so? Can you answer? I think, yeah, B. The partner can be expelled by majority votes of the partner. Okay. The expulsion of the partner is determined by the court. A partner can only be expelled if they commit fraud. A partner can be expelled with the consent of all the partners. Yes, Virendra ji, Sri. Okay, great. Great. I think right answers are coming now. Okay. So the answer is a partner can be expelled with the consent of all other partners is the answer for this. Similarly, let us go with another one. In the event of no return partnership deed, how is the admission of a new partner? In the previous case, it is an expulsion. It is now the inclusion of a new partner. How to admit a new partner? Yeah, I am looking for answers from you. Yeah, a new partner can be admitted by a majority vote. Again, you're going with that. Some Ramesh ji, Prashant Kumar ji, okay. Dev ji, okay. Great, great. Yeah, you can just go through all the options available there. Yeah, Jyoti ji, okay. Virendra ji, okay. Yeah, yes, yeah. Yeah, it actually the first one will lure us to put it, but the answer is a new partner must be admitted with the approval of all the existing partners is the right answer. Thank you, sir. Thanks for the great response from all of you. And let us try to understand the another phase of partnership, which is almost we can tell a combination of a corporate and a partnership. Whatever the benefits are there in the corporate as well as the partnership are brought together. And a new law has been enacted, which is called as Limited Liability Partnership Act. The Limited Liability Partnership Act in India came to existence with the enactment of Limited Liability Partnership Act 2008. Earlier one, you remember, it is a Partnership Act 1932. It is now Limited Liability Partnership Act 2008, which laid down the law for the formation and regulation of limited liability partnership. Definition is limited liability partnership means a partnership formed and registered under this act. What is the nature of limited liability partnership? Let us go through. A LLP is a body corporate formed and incorporated under this act. It is a legal entity separate from that of its partners. A limited liability shall have perpetual succession. It is these 2 points are not there in the partnership. It is like a separate legal entity, or shall be a perpetual succession is not going to happen in the partnership form. Any change in the partners of LLP shall not affect the existence, rights or liabilities of the LLP. That is what Indian Partnership Act 1932 shall not apply to a LLP. So Partnership Act will not apply here. What is applicable here is Limited Liability Partnership Act 2008 only will apply. So the nature of limited liability partnership, you can say it is a win-win situation of both partnership as well as the corporate bodies. So let us try to understand the difference between the partnership and a limited liability partnership. The applicable law is the Indian Partnership Act for partnership and LLP Act for LLP. Registration is optional, but whereas in the LLP, the registration is compulsory. Creation is created by an agreement. It is created by law, LLP. Corporate body can't be a part of the partner, whereas corporate can become its partner in LLP. Separate legal entity, it is not a separate legal entity partnership, whereas LLP is treated as a separate legal entity. What we already understood what is a separate legal entity in partnership. Perpetual succession, partnership do not have perpetual succession. It has perpetual succession and individual partners may come and go. So number of partners minimum 2 to maximum 50, whereas in LLP minimum is 2 only, but there is no maximum limit for LLP. Ownership of assets, firms cannot own any assets. The partners own the assets of the firm. The LLP as an independent entity can own the assets. Liability when the partnership is unlimited for the partners, whereas in LLP, as the name suggests, it is a limited liability, limited to the extent of their contribution towards the LLP. This is the basic difference between the partnership and the limited liability partnership. So the reconstitution. When is the reconstitution required? This chart shows that reconstitution can happen in the partnership whenever the partner wants, whenever there is a death of one of the partner or retirement of one of the partner, whenever the new partner wants to enter. These are all the things where the reconstitution of partnership has to be carried out. Partnership is the result of agreement, and any change in the existing agreement brings to an end of the existing agreement. So let us try to understand this statement once again. Partnership is the result of an agreement. Few people have come and agreed to a particular terms and conditions. And any change in the existing agreement, any change, either change in the profit sharing ratio or going or outgoing of one of the partners, death or any other change, brings to end of the existing agreement. And a new agreement comes into force. It amounts to reconstitution of the firm. Okay, modes of reconstitution of the partnership firm. Change in the profit sharing ratio among the existing partners, admission of a new partner, we have already told, retirement of an existing partner, death of a partner, amalgamation of two partnership firms also bring end to the existing partnership, and a new partnership has to be floated up. A new partnership agreement has to come out. So few questions on this to solidify or refine what we have already learned. So under the Limited Liability Partnership Act 2008, who is responsible for the management of LLP? Who is responsible? Can I get some? LLP is similar to company and similar to partnership. It is a combination of both. We cannot call it as a company, but it needs registration. Yeah, I'm getting the answers from Geeta, Madam, Sagartika, Ramesh, Aruna, Rakesh. Yeah, under the Limited Liability Partnership Act 2008, who is responsible for the management of an LLP? I'll read out the options also. Only the managing partner, all the partners has agreed in the LLP agreement, the government appointed manager, the partner with the highest capital investment, the limited liability partnership itself, not the partners. So we all know ultimately it is a partnership. The nature is partnership. All the partners as agreed in the LLP will be responsible for the management of the LLP. Which of the following is the benefit of forming a limited liability partnership? So few of you have questioned what, how it is, whether company or partner, what nature it has got. So this question will answer that. You can go through. Which of the following is a benefit of forming a limited liability partnership? Partners are responsibly liable for the firm's debt and obligation. Yeah, answers. It offers the flexibility of partnership with the advantage of limited liability. Yeah, many are getting Devji, Aman. Yeah, Virendra, Ramesh, yeah, great. Yeah, it offers the flexibility of a partnership with the advantage of the limited liability. In the partnership, there is an unlimited liability, but whereas in the limited liability partnership, it is limited to the capital that they have contributed or the what? Yeah, thank you. Thank you, sir. Thank you. And we will go with another question. Which of the following is type of reconstitution of a partnership firm? Which of the following is the type of reconstitution of a partnership firm? Addition of a new partner, resolution of a firm. Yeah, Sri. Yeah, it's an easy question. You can attempt. Everyone can answer that question. Transfer of ownership to sole proprietorship, merger with a public company, going public. Yeah, Virendraji. Yes, Rakeshji. Yes, great. So addition of a new partner is a type of reconstitution of the partnership. That's what we have learned there. Thank you, Prashantji. Okay. Which of the following is a key feature of the limited liability partners in India? Partners have limited liability, which is the key feature. I'm looking for a key feature. Yeah, Udayji. Yeah, thank you. Partners have unlimited liability for the firm's debit. Key feature of LLP, only one is right. Yeah, yes. Great, Geeta, Sri, Pooja Devi, great, Virendraji. Great, great. Partners have limited liability. That's what we have discussed earlier also, meaning that personal assets are protected in the LLP formation. Okay, now let us understand change in profit sharing ratio. Like a change in profit sharing ratio implies purchase of shares of profit by one or more partner from other partner or partners. Adjustment required at the time of change in the profit sharing ratio are determination of sacrificing ratio and gaining ratio, accounting of goodwill. We will go through about the goodwill, how it is calculated, what is the definition of it, and different methods for it. Accounting treatment of reserves and accumulated profits, accounting for revaluation of assets and liabilities, adjustment of capital. One more point. Yeah. So let us try to go through what is the goodwill, nature of goodwill. Factors affecting the value of goodwill also we will see. Goodwill is an intangible asset. Goodwill is an intangible. There is no physical asset that you can see for the goodwill, since it has no physical existence and can't be seen or touched. That's what it is called as intangible. Intangibles means that that asset which cannot be touched or felt. But it is not a fictitious asset, because fictitious assets do not have a value, whereas goodwill has a value in case of profit-making concerns. It can be sold through a sale, will be possible along with the sale of the entire business. So whenever there is a sale of business, this goodwill can also fetch certain amount to the promoters or the partners. So what are all the basic factors that will impact the goodwill here? The favorable location of the business can be one of the factors, efficiency of the management, longevity of the business, nature of the goods, risk involved in that business, trends of the profits in the previous thing, and future competition in that area. If it is a niche area, there is not much competition, the goodwill will be more, and the capital required for that business. These are all the things that will affect the value of the goodwill. So how the goodwill can be classified? Goodwill is basically classified into two forms. One goodwill is purchased goodwill, another is self-generated goodwill. Goodwill, it is a goodwill which is acquired by making a payment, is called as a purchased goodwill. The features of it are, it arises on purchase of a business. It is recorded in the books of the account because consideration is paid for it. It is shown in the balance sheet on the asset side. It is shown in the balance sheet as an asset, goodwill. On the other hand, self-generated goodwill, of course, it is also appearing on the asset side only. How it is generated, it is intentionally generated goodwill, which arises from the number of characteristics or attributes which an ongoing business possesses. The features of it are, it is intentionally generated over a long period of time. Its valuation depends on the subjective judgment of the valuer. As per the accounting standards 26 in the AS 38, intangible assets, it is not recorded in the books of account. Okay. Methods or valuation of the goodwill. There are three ways. Three methods which can be used to calculate the goodwill. The first one is average profit method. Second one is super profit method. Third one being the capitalization method. Let us try to understand each one of these methods in a simple terms. So average profit method, how it is arrived is, simple average profit method, value of goodwill is equal to average profit into number of years of purchase. Average profit, the formula for average profit is total actual profit by given number of years. That is the average profit. Weighted average profit, this is another method. Weighted average profit method under the average profit method only. Value of goodwill is equal to weighted average profit into number of years of purchase. Weighted average profit is arrived at total of products of the profit by total of weights. So this is what the formula it is. So let us try to understand the second method. Super profit method. value of goodwill in this case is super profit into number of years of purchase. So what is super profit? We will try to make it out. So normal profit is equal to average capital employed into normal rate of return by 100. That is what the normal profit is. Normal profit is equal to average capital employed into normal rate of return by 100. Capital employed is equal to total assets. Capital employed is nothing but total assets excluding goodwill and fictitious assets minus external liabilities. This is what the capital employed. So super profit is equal to average profit minus normal profit. Super profit is nothing but average profit minus normal profit. So average profit, we know how to calculate. It is a total actual profit by given number of years. Okay. And normal profit we have discussed earlier, average capital employed into normal rate of return by 100. So the third method is capitalization method. Capitalization of average profit. The value of goodwill is equal to capitalized value of average profit minus actual capital employed. Actual capital employed. Capitalized value value is equal to average profit into 100 by normal rate of return. So capital employed is, again we know, total assets excluding goodwill and fictitious assets minus external liabilities. This is what the third method is. And in that capitalization method, another formula we have is capitalization of super profit. It based on the super profit. Goodwill is equal to super profit into 100 by normal rate of return. Okay, this is what the super profit, again we know it is there here. Super profit is equal to average profit minus normal profit. We will try to understand the other ways of reconstitution of the partnership. Admission of a partner is one of the mode of reconstitution of a partner. We have already learned that, under which existing agreement comes to an end and a new one comes into existence. According to the section 31 of 1 of the Indian Partnership Act, a new partner can be admitted only with the consent of the all existing partners. This was also one of the questions that I have put in the MCQ in the previous slides also. The same slide can also be made. Which section of Indian Partnership Act calls for consent of all the existing partners for admitting a new partner? The section 31 of 1 can also be, question can also be framed in that way. Rights of a new partner. What are all the rights that the new partner has who is now admitted? Right to share the future profits of the firm. He will have rights for the future profits. Right to share in the assets of the firm. Whatever the assets the firm is having, he will have a right over those assets. 9. And the next one is, following adjustments are needed at the time of admission of the new partner. These are the things that we generally the partnership have to take care while admitting the new partner. Calculation of the new profit sharing ratio. What should be the new profit sharing ratio? And accounting treatment of the goodwill. How the goodwill has to be treated. Accounting treatment for revaluation of assets and liabilities. Accounting treatment of reserves and accumulated profits, adjustments of capital on the basis of new profit sharing ratio. These are all the 5 elements that need to be taken care while admitting the new partner into the partnership. When a partner is retiring from the partnership, we know that the partner has a right to retire from the partnership by giving a advance notice to all the other partners and the firm. Retirement of a partner is one of the modes of reconstitution. It will lead to the reconstitution of the firm, under which the existing partner's deed comes to an end, and in its place, a new one among the remaining partner comes into existence. The remaining partners come together to form a new partnership. A retiring partner has also got certain rights and share, entitled to get the following. He is entitled to get share in his goodwill, share in the goodwill of the firm, share in reserves that the firm already have, share in the revaluation of the assets and liabilities. These are all the rights that the retiring partner has. Death of a partner. The partnership comes to an end immediately, whenever a partner dies, although the firm may continue with the remaining partners. So the firm may continue, we have already told, whenever there is a change in the constitution, because death of one of the partnership, will change the constitution of the partner. So it will come to an end immediately. The deceased partner is also entitled to get his share in the firm as per the provisions of the partnership agreement. His share in the firm is calculated in the same manner as in the case of a retiring partner. The share will be treated as the retiring partner. The same way the share has to be calculated, and it has to be given to the legal heads there. Thus, the legal representatives of the deceased partner are entitled to claim the following amounts, which are credited to his capital account. The amount standing to the credit in his capital account, the deceased partner capital account, his share of increase in the value of the goodwill of the firm, interest, interest on capital, if provided in the partnership deed, his share of profit on the revaluation of assets and liabilities, his share of the undistributed profits or reserves, his share of profits up to the date of his death. So profits have to be calculated till the date of his death and shared accordingly to the deceased partner's account. So the following amount will be debited to the account of the, that is what the credit it has to come. These are all the things that has to be debited. Account debited to the account of the deceased partner for ascertaining the amount due to his legal representatives. One is drawings, if there are any drawings in that account by the deceased partner before his departure. Interest on drawing, his share of loss on the revaluation of assets and liabilities, its value in liable to constant fluctuation, his share of undistributed losses such as debit balance of profit and loss accounts, his share of the reduction in the value of the goodwill. These are all the things that need to be debited. Calculation of the profit, as I told, till the date of the death of the that particular partner, it has to be calculated. In the death of a partner, the death of a partner occurs on any day during the year. The executor of the deceased partner will also be entitled to the share of profit. Such profit may be ascertained from the following methods. There are two methods that can be taken to calculate the profit: on the basis of the time, and the second method is on the basis of the sales. On the basis of time, in this method, we have to take into consideration the profit of the last year and the time for which he remained a partner during the current year. On the basis of the last year's profit, we shall calculate the proportionate profit up to the date of the death and then calculate the deceased partner's share. For example, the last year's profit is for 12 months. If the partner has died in the 6th month, so for the 6 months, the profit based on the last year profit will be calculated and credited to the partner's account. On the basis of the sale, that is current. In this method, we have to take into consideration the profit and the total sales of the last year. Profit and sales of the last year. What is the sale and profit of the last year? Thereafter, the profit of the current year is estimated on the basis of the sale. So last year's sale of the last year's sale is taken. Last year profit is also taken. So this year's sale, based on this year's sale, this year profit will be arrived. And the sale up to the date of the death, based on that, the profit will be arrived and it will be credited to the deceased partner's account. So let us take some questions to solidify the knowledge that we have gained in the previous slides. What is typically the first step in setting the account of an outgoing partner in a partnership firm? What is the first step that we are supposed to take? I'm looking for answers. There are 5 options for this. Yeah, can participate. Yeah, am I audible, sir? This message. Okay. Yeah, yes, dear participants, whether I'm audible, I think I'm audible. So is it audible or what happened? There was no answers. Let us take this question. What is typically the first step in setting the account of an outgoing partner in the partnership firm? I'm looking for an answers from you. Huh? Yeah. Okay. I think my screen was not getting refreshed. Thank you. I got from Malati, Aruna, Udayji, Aman, Sharmaji. Great. Thank you. Thanks for the participant. Yes, sir. We will take up one nomination facilities available in the partnership account or not, sir. Yes, we will take up the question. Please let us complete the slide as per the schedule. So what is typically the first step in setting the account? The answer is valuing and distributing the partner share of the firm's asset. That is what the first step. So let us go with the next one. Which of the following is not part of the settlement of the account when a partner leaves the firm? Not part of the settlement of the account. Which one of the following is not part of the settlement account? So questions can also come, indirect questions. Puja Devi madam, I think PPT will be available in Union Vidya. And our webinar will also be available there. Yeah. Yes, great. I'm getting answers. Yes, sir. So the answer is D, addition of the outgoing partner's liability to the remaining partner's account is what it is. What is the definition of the goodwill in the context of a partnership firm? What is the goodwill in the context of the partnership firm? The total capital invested by the partner in the firm, the value of the firm's assets minus its liability. What is it? Yeah. Beldur, Arunji, Udayji, Puja Deviji, Mahatoji, Ramesh Sahaji, great participation. So it is actually the intangible assets that represents the firm's reputation, customer loyalty and brand value constitute the goodwill. Great, sir. Great. Which of the following method is commonly used to calculate goodwill based on the firm's past average profit? Average profit based on what is the method? I think the question itself has the answer. It is an easy one to take up. Yeah, Sri got answer. Yes, Vandanaji, great. Yeah, others can also answer it. Yes, yeah. Yes, it's an average profit method because the question itself has the average. In the capitalization of super profit method, how is the super profit calculated? We have several times tried to understand what is the super profit and how it is calculated. It is a difference between particular two profits. How is that super profit calculated? Yeah. Yes, Virendra ji, great. Yeah, I am looking for answers from others also. Mahatoji, Arunaji, Ramesh Sahaji. Yeah. No, I think, yeah. By subtracting the nominal profit from the average profit of the firm, we can get the super profit. Okay. Which of the following statement accurately describes a key difference between the partnership and the limited liability partnership? What is the key? Which one will differentiate between the partnership and the limited liability partnership? Yes, sir. I am looking for answers from you. Yes, 3B. Yes. Great. I think the concept has really gone. Yes. In a partnership, partners have unlimited liability, while in an LLP, partners have limited liability. That is the key differentiator between partnership and limited liability partnership. Which one of the following is not a feature of limited liability partnership compared to traditional partnership? Which one of them is not a feature of a limited liability partnership? Which is not a feature? It's a negating question. Yeah, Sri. Yes. Ramesh Taji. Yeah. Yes. Others can also answer. Yes, sir. Antoji, great. So LLP can raise capital by issuing shares. Though LLP, the LLP is ultimately a partnership only, it cannot raise the capital from outside by issuing share. It only has certain limited partners through whom the capital has to be raised. So the answer is C. Hope I am clear in that. Actually, the question is a negating one. Which of the following is not a feature? So many are getting struck with a feature. So the questions can be misleading, like in a not in a feature, like kind of thing. So in which of the following aspects does a limited liability partnership differ from a partnership? Again, it is a difference between the partnership and a limited liability partnership only. So you actually see, okay, Sri has given answer. Yeah, yeah. Okay, great. LLPs are taxed as a separate entities while partnerships are not. That we have discussed in the initial stage also. Which of the following is a common feature of both traditional partnership and a limited liability partnership? Which is common for both? Common for both. Yeah, yes, yes. Great, great, great. Both should have a minimum of 2 members, without which a partnership can't be formed. Okay. Which of the following is true about the liability of a partner in a traditional partnership as compared to the LLP? Liability talks about the liability. You can understand that. Basic definition of a partnership only, it actually. Okay, Vinodji, Mathurji. A limited liability partnership, actually, we have discussed, it is limited to the capital that they have contributed. Whereas in the partnership only, it is unlimited, their liability. Yeah. So great, Geeta, Vandana, Sri, great. Yeah. So in traditional partnership, partners are jointly and severally responsible for the firm's debt, where in LLP, liability is limited to the amount invested only. That is what the difference, key differentiator. How is the profit sharing calculated when a partner dies in the middle of a financial year in a partnership firm? How is the profit calculated? There are 5 options. You can pick one. Try to. This is a simple question. We have already gone through the session. The deceased partner's share of profit is calculated on the entire year and paid to their legal heir. What it is? Yeah, B. Yes, Malti ji, yeah, Arun ji, Atho ji, great. It is correct. The deceased partner's share of profit is calculated only on the profit that they were alive during the financial year. So during that period only, he is eligible for the profit. Great, Subhashini ji, great. So the next one. Which of the following factor is not typically considered when determining the value of the goodwill in a partnership? What is not considered? What is not considered while arriving the goodwill in a partnership firm? We have several things that we take it while arriving at the goodwill. Yes, Srini. Yes, Mahtoji. Yes, great. Maltiji. Great. Yeah, let us try to not typically considered. But the most appropriate answer in this is tangible assets are not considered while arriving at the goodwill. Goodwill is an intangible asset. Okay, great. So now let us try to understand the company. We have tried to understand about the partnership, and we try to understand about the LLP and its features and differences between the LLP and basic calculation of the profit, how the reconstitution happens and all. And company accounts also we deal. So try to understand what a company is. A company is an association of a person who contributes money or monies worth to the common stock and uses it for common purpose. Okay. It is created by law and affected by law. It is a legal person just as much as individual, but no physical evidence is there. No physical evidence. No physical, physically not visible. Okay, there are different types of companies. They may be classified on the basis of their incorporation, basis on the ownership, basis on the liability of the members. This is what basically a company is. So company is also an association of persons who contribute money or money's worth to a common stock and uses it for a common purpose. That is what. And it is an individual. We should treat it as a legal person. So based company's account based on the incorporation, it can be characterized or it can be classified into 4 types. That is a chartered company, statutory company, registered company, foreign company. The questions may come on the definition of these also. So let us try to look into the definition of it. The chartered company, a chartered company is one that is established under a special charter issued by the king or emperor or a head of the state. It is not found in India. So basically it is not there. The other 3 forms are available in the country. The another one is statutory company, created or incorporated by a special act passed by the central or state legislature. Registered company, a company registered under the provisions of the Companies Act. Foreign company, a company which is incorporated outside India but has the place of business in India. These are all the basic thing based on the incorporation. What is functional in India is statutory company, registered company, and foreign company. So on the basis of the ownership, who owns that company, the company is also divided into multiple, can be classified in multiple ways. It is a private limited company. A private company is a company by its articles. A group of people will come and form a private company. Public company, a company other than a private company, which a large number of large number of shareholders with it. Government company, where not less than 51% share capital is held by the government, then it is called as a government company. Holding company, holder of a subsidiary company, a group of companies holded by another company, that company is called as a holding company. Associate company, a company in which the other company has a significant influence, then it is called as an associate company. One-person company, a company which has only one person as a member, is called as one-person company or OPC. Subsidiary company, a company in which holding company controls the composition of the board of directors. The question may be confusing, can be floated between a subsidiary company and an associate company. Associate company, a company in which the other company has significant influence. The other company has significant influence. Subsidiary company, a company in which holding company controls the composition of the board of directors. It has the board of directors also controlled by a company, then it is called as another company, then it is called as subsidiary company. So on the basis of liabilities, again, this is classified into 3. Company limited by shares. It is a company in which liability of its members is limited by memorandum to the amount, if any, unpaid on the shares respectively held by them. Most of the companies in India are companies with limited liability. So company limited by guarantee. It is a company in which liability of the member is fixed to a certain amount. The amount is called guarantee. So that companies are called as company limited by guarantee. Company with unlimited liability. It is a company in which the liability of the members is unlimited. Such a company can be incorporated with or without share capital. That is. So basically company limited by share is what is operational in India majorly. So let us understand what the share is. So share section 2 of 84 of the Companies Act 2013 defines the share as a share in which share capital of a company and it includes stock. The share capital of a company is divided into unit of smaller denominations. Each such unit is called share. It entitles the holder to ownership in the company. So based on the appetite of the shareholder, he can subscribe to certain amount of share and pay the amount and become the part owner of that constitution called as company. So types of shares, the kind of shares. As per the section 43 of the Companies Act 2013, share capital of a company can be of 2 types. One is equity share The another is called preferential share capital. So equity share, it consists of equity shares. Equity shares are shares which are not preference shares. They carry maximum risk and reward of the business. That is basically the promoter share is the equity share. In the case of high profits, they receive a payment of higher dividend and appreciation in the market value of their share. While in the case of loss, there exists a higher risk of losing part or all the shares. Equity shares capital may be with the voting rights or with the differential rights related to dividend, voting or any other rights. So what is preferential shares? Preferential share capital consists of preference shares as per section 43 of B of Companies Act 2013. Preference shares are shares which carry preferential rights, because when it comes to liquidation, equity shares are paid last, whereas the preference share gets the preference over the equity shares. So forfeiture of the shares. Forfeiture of the shares is referred to as the situation when the allotted shares are cancelled by the issuing company due to non-payment of subscription. If the subscription is not paid, even if it is allotted, it can be cancelled by the company. Amount as requested by the issuing company from the shareholder. The situation when the allotted shares are cancelled by the issuing company due to non-payment of the subscription amount as requested by the issuing company from the shareholder. In the event of forfeiture of the share, the shareholders lose the right and interest of being a shareholder and ceases to be the member of the organization. After it is forfeiture, the shareholder, he doesn't have any share, so he doesn't have any ceases the right. So basically we will take some 3-4 questions in it. Which of the following statements are correctly describes the treatment of a company accounting on the basis of its incorporation? Basing on the incorporation, what is that? A company's accounts are treated. Can I get some answers for this? Yeah, we have almost come to the end of the PPT. Which of the following statements correctly describes the treatment of a company account on the basis of its incorporation? EFC, yeah, yes. Ramkrishna ji, yes. Aman Sharma ji, great. Mahato ji, yeah, yes, yeah. Sri, yes, great. The company becomes a separate legal entity only after it is registered with the Register of Companies. Great. Okay. Which of the following type of companies, as per the basis of incorporation, is created by a special act passed by the center or state legislature? What is called? It is created by a law. Then what is called as? Yes, great. Man Sharma ji, Nee ji, Mahato, Vandana, great. So it's a statutory company formed by legislature. Which of the following type of companies is defined as a company? This is an easy one. 51% of its share capital is held by government. Then it is called as, yeah, Sri, yes, I got it. Nee, great. It's a government company. Great. Which of the following type of companies is limited by liability of its member to the amount, if any, unpaid on the share held by them? Then it is called as limited by the amount that they have paid. So yes, Amanji company limited by guarantee. There is no guarantee in this. We are telling about the amount only. So Shriji, you can correct it. Yes, Geeta ji. Yes, Mahato ji. Vandana ji. Yes, great. Company limited by the shares. Okay. Now let us, this is the last section, the bills of exchange. Any business, it is a bill of exchange will happen, bill will be there. Bill of exchange is defined as an instrument in writing and signed by the maker containing an unconditional order to pay a certain sum of money and money only to a person named in the instrument or to his order to the bearer on a certain fixed feature, date or on demand. Okay, there are 3 parties to the bill of exchange: drawer, drawee, payee. Drawer is a person who draws the bill. Drawee, a person on whom the bill is drawn. Payee, a person who is going to receive money. So these are all the 3 parties that are generally there in the bill. So bill of exchange, it is an unconditional order to pay. The features of it is there. The features of bill of exchange is it is an unconditional order to pay. It is made by a creditor, accepted by creditor is necessary. Acceptance by creditor is necessary for a person who is going to receive money against the bill. The said bill will be bills receivable, whereas for the person who has to pay against the bill, it will be bill payable. If you are supposed to receive, then it is a bill receivable, that is called as an asset. If it is a payable, then it is called as bill payable, and it is a liability to the company or the firm. According to the NI Act, a check is a bill of exchange drawn by on a specified banker and payable on demand. This question may formulate, check is a bill of exchange that you can take it. So with this, the session comes to an end. I kept my timelines. Amitji, we have done that. So hope there were one question. Whether the partnership can have what was the question? Nomination facility for a partnership firm. It is a big no. That was one question, one of the thing. Yes, sir. Definitely, we will upload all the MCQs. Multiple choice questions are there. Vasapa sir, we have completed the session, sir.
No, it is ended.
Yeah, we can take a leave. Thank you, friends. Thanks for your kind cooperation.